And then we're going to start the webinar as well. Okay, so webinar is now live. So we should start getting quite a few people coming in. See, there we go. We got participants coming in. Let's give it a second while we go live on YouTube. So for those of you that are watching us right now, we are just going live on YouTube and we are officially live. All right, so we have attendees joining right now. So by the way, thank you everyone for signing up to the webinar. This is by far our biggest webinar. I think we had 160 people that signed up. So thank you very much for everyone that signed up. Definitely, there's clearly a lot of demand for this, and I think you guys will see why, and I think that demand is very much justified once we get started with Greg. But before we do that, I just want show hand, like everything's good right now, audio, visual, everything's looking good. Okay, cool, perfect. So I'm going to share my screen. Okay. All right. So everyone, once again, welcome to the webinar. All right. We are also, by the way, streaming this live on YouTube. So for those of you that want to either A, watch a recording after this, right? Or B, if you want to subscribe to us on YouTube and kind of see what we do these things very often. We do these for algorithm trading. We do this for machine learning. We're going to be doing this for future courses as well. So if you guys want to get any other stuff, free stuff from us in the future, make sure you subscribe to us on YouTube, and that's Lumiwealth. Just search for Lumiwealth. There you go. And let me actually type that in so you guys see how this looks. So we go Lumiwealth, right? You search for that. We're right up at the very top. And then you just hit subscribe on the right-hand side. And I'll get you guys, first of all, able to see the recording of this video, but will also allow you to see any future things that come out will automatically, if you have YouTube installed on your phone, it'll kind of say, we're broadcasting live and you guys can just jump in and watch, right? We're definitely growing quite quickly on YouTube. All right, okay. So there we go. So Greg is updating that. Just changing the title there. Let's move down. Okay, cool, perfect. So today what we're going to be talking about is we're going to be talking about machine learning. Basically what we're doing is and I think Greg can describe this even better than myself, but essentially what we're doing is we're forecasting stock prices using machine learning and specifically natural language processing, which means basically, the artificial intelligence stuff that you guys hear about, the machine learning stuff, we're using that, but we're also using something that's specifically reading text and taking that text information and able to derive value from that and specifically improve your trading returns as well. So Greg, we'll talk about that. Show you our agenda. I'm going to take you guys through the introduction. I'm going to tell you guys a little bit about the company, myself, that sort of thing, and this course in particular, if you guys want to sign up. And then I'll turn it over to Greg, where Greg will basically take you through this really cool demo. And I haven't even seen this yet, by the way, guys. So I'm actually also very excited to see this and see the results. Cool, awesome. So to get started, first of all, who am I? My name is Robert. I'm the CEO of Lumiwealth, right? Started this company about 2 years ago. I'm also the instructor for the algorithmic trading course as well. So if you guys are interested in that, I'm the one teaching that. We have 2 sessions going now. I think our next one starts in May, I believe. Kind of my background is, I've been coding for 20 plus years, worked on Wall Street, designed a bunch of these algorithms. And this is basically my life right now is coding algorithms and helping people with trading returns. That's essentially what I do, right? And what we do as a company. Lumiwealth, to tell you a little bit more about the company itself, we basically started with the intention of helping everyday people improve their investment returns, right? So right now we're doing that specifically with trading. We plan to even do that with even more things in the future, real estate, blockchain, all that kind of stuff. But basically, kind of the premise goes, kind of the story goes is, I worked on Wall Street for a number of years. I saw a lot of these people making tons and tons of money. But, a lot of people didn't have access to the same types of tooling and the same types of investments. So I definitely thought it was a great thing to be able to bring that to the everyday people. And that's kind of what we're doing with our courses. We're doing that with our open source software, and we plan to expand out our offering through many other things as well. All right. So as I said, we have 2 courses right now. We're, I think, launching another 2 in the next 2 months. or 3 months, depending on how things work out there. We're planning another options course soon, and we're also planning a kind of like helping you get a job in fintech kind of course as well. Those are two things that were on the horizon. But what we're talking about today is our machine learning course. So I'm going to take you through kind of a little bit about it. And by the way, the way that you guys can get to this page is either you find us on YouTube. You can get the recording of this. And on the recording, we'll show you, you'll have access to the entire presentation. You can click on any links, right? Or you could also just go through to lumiwealth.com. When you go to lumiwealth.com, then you scroll down a little bit, right? You see our courses, and the middle one right here is a machine learning for finance and trading, right? And I see that there's a Q&A here, so I'm going to answer this Q&A. Hi, is your company listed on any exchange? Not yet. That's a great question, though. We definitely would like to go public. There's a lot involved in going public. There's many different ways of going public, but it's definitely something that we've talked about and we're considering, but probably not for another year or so, I think, right? Unless we find some clever ways of doing it without doing a ridiculous amount of paperwork and having a ton of there's a lot of requirements to go public depending on the exchange, and you have millions of dollars in your bank account and stuff like that. Regardless, we're thinking about it, but not yet. All right. Thank you for the question. And by the way, guys, if you guys want to ask questions throughout the presentation, you could use the Q&A or you could use the chat feature. Either one is on Zoom, and we'll be paying attention to both of those. All right. So thank you very much for your question. All right. Okay. So we've now gone to the machine learning course. And to kind of tell you a little bit about the course itself, we have 3 different plans for all of our courses. The self-directed plan is not currently available, although we have had people actually purchase it in advance, right? So just to let you know, Greg, there will be people watching the video afterwards already. They've already purchased it. But the self-directed is essentially the recordings of our live classes that you could watch afterwards, after the fact. But really our main seller, the thing that most people really want from things like this, from our courses, is our live classes. And our live classes are basically, it's kind of like this, kind of like over Zoom. We're all speaking to each other. There's an instructor. So in the algo trading class, it's myself. In machine learning, it'll be Greg, who's lecturing on a specific topic. And then you can ask questions live, right? So it's a lot more interactive than watching just a video. I don't know about you guys. Sometimes I watch videos and my eyes glaze over sometimes, especially very technical content. It's a lot more engaging and a lot better to learn when you're going through this live, right? And I know a lot of our students say the same thing. It's basically, we're going through this course, we're teaching you a specific topic, and then you can ask questions throughout and stay engaged. And you can also get to know a lot of your students and becomes really like a community as well. So it's much more like a real life class as opposed to just sitting there and watching a bunch of YouTube videos or something, right? And obviously very well organized and taught by a very, very good instructor, which I'll tell you about kind of Greg's background in a bit as well. All right. We also have project help and tutoring plans, which basically, if you want some extra help, you want some one-on-one time, you'll get the live classes in addition to the project help as well. So that's also available. This is our pricing. Like I said, our live classes is our most popular. This will give you access to the live class with Greg, and you guys will be asking lots of questions and things like that throughout. There's another one that we're selling here, and this has become very, very popular. People actually really love this one, where you'll get, and actually there's more bundles on here. If you speak to our sales team, we can get you we can also sell you the self-directed, which is currently not available, but we can get that for you anyways. I know we've done that in the past, and we could also do a bundle for both live classes if you'd like as well. Neither of those are up here. But in this case, we've been selling a lot of these live classes, and actually funny enough is this popular sign should probably be over this one, where a lot of people buy the bundle. People buy the self-directed algorithmic trading, and they'll buy the live class, the machine learning. I can tell you people really like that plan. All right. And basically what that includes is 8 weeks, right? Of our, so let's actually go down here. So it starts on March 30th, right? So in a week, right? Registration actually closes on Friday. So if you guys want to sign up to this class, make sure you sign up ASAP, because this is like we're starting in a week, right? So definitely, if you want to sign up, please sign up as soon as possible. It's an 8-week long course, excluding holiday breaks, right? And then we recommend about 8 to 12 hours of learning, including the lectures themselves. And the class schedule it's every Tuesday at 8 p.m. Eastern or 5 p.m. Pacific, right? And the classes are usually about an hour long. Although I'll say this to Greg, that sometimes we go over an hour as well. Sometimes you can't help it, right? There's a lot of things to cover. What kind of model do you guys have in algorithmic trading? I'm sorry, I'm reading a question here from Kumar. What kind of model do you have in algorithmic trading? The other is machine learning, which probably uses deep learning. So in algorithmic trading, we don't use any machine learning models, right? We teach a little bit of machine learning at the very end, but the machine learning course, this course is what covers that, right? In our algorithmic trading, we basically teach you how to build a trading robot from scratch using open source technology. So everything is completely free. Teach you how to build this kind of a trading robot. If you know machine learning, you can add that on to the bots, right? It's very, very possible to do that. Or if you take Greg's class, you can learn how to do that as well. But we don't use any machine learning models in particular. A lot of people that go through our classes, they're doing things like I know one person was asking about this recently about, biotechnology. They're reading news feeds, or they're reading, things that come out in biotechnology, and they're trading off of that, or they're trading off of technical indicators, or they're trading off of some strategy that they know that works for them, like basically automating what they're doing. That's what algorithmic trading is. And then the machine learning really gives you those smarts. Machine learning really adds on the ability to use like the artificial intelligence types of techniques for these bots, right? Thank you for that question. All right, so this machine learning class starts March 30th. So again, it's starting in a week. If you guys want, if you guys are interested in this, make sure that you sign up soon. I'm going to leave the course curriculum to Greg. I'll let Greg go through the course curriculum because he knows this much better than I do, right? But basically, we have 3 parts. It's 8 weeks long, right? And we have 2 projects, right? We have one project where you're forecasting stock prices that we actually talked about in the last webinar. So if you guys want to see that, the last webinar, we actually went over that. So again, it's on our YouTube channel, the recordings there. And then this one, project 2, this is basically Greg showing you a demo of this today, of this project 2. All right. This is okay. And then to talk a little bit about Greg, let's see, do I have to cover anything else before we get into that? So I'm going to leave that to the very end. So one more Q&A here. What if I have no experience whatsoever in coding? Well, okay. So if you have no experience in coding, I would highly recommend that you get the bundle, right? The bundle, what it does, the algorithmic trading course takes you from scratch. There's a lot of people that take our algorithmic trading course that have never coded before. So we kind of like take you through all that and show you, first of all, how to code and all that kind of thing. And then when you get into later stages, you'll learn how to build a bot, right? If you've never coded in your life before, I would highly recommend that you get the bundle, right? So that way you're learning how to code, and then you're getting into the machine learning course, right? Okay, so we've talked about the machine learning course. Our classes sell out really quickly. In this case, I mean, in a week we're starting, so make sure that you sign up soon. Make sure you follow us on YouTube. Again, that's Lumiwealth on YouTube, and that's where you're going to find all the course recordings, or the webinar recordings, I should say. And then our Discord channel. For those of you that don't know about Discord, by the way, I think Microsoft is acquiring them. I just heard today $10 billion that Microsoft is acquiring Discord. So huge acquisition. It's a fantastic company. So it doesn't surprise me very much that it's $10 billion. They're absolutely amazing. We have a huge community on Discord. You can click this link. And again, this whole presentation, all these links are going to be available on our YouTube. So you basically click the link. It's going to take you to our Discord channel, where you'll see a lot of people in our community. We talk about stocks, Bitcoin, that sort of thing. Then this is also where you get to meet our alumni and speak to our alumni and ask questions about that. You can ask questions about our Lumiwealth, which is our open source algorithmic trading bot. There's a lot of stuff going on here, and it's really a good place to get to know people that have taken the courses before, that will take the courses. And it's just a great community if you're interested in this sort of thing. So highly recommend that you guys join us on Discord. We've got 2 Q&A here. Do all of your teachings and exercises use Python? Can I also use R? That's a question for Greg, I believe. I'll let Greg take that, but my guess is that it's Python only. Is that correct, Greg?
Yeah, I mean, so for machine learning, pretty much Python is the way to roll. I mean, virtually everything is Python. You can do a lot of stuff in R, and R is very capable, but R is mainly used in academic area, and Python is used kind of everywhere else, and even academic now is mainly using Python. So for machine learning, you really want to use Python.
Yeah, definitely. And I completely second that as well. That's the same thing we say. So for example, like our machine learning course, our algorithmic trading course, we use Python as well. And the reason why is because Python not only can do the data science stuff, but then can also like make things work. Like building a trading bot in R is like, as far as I know, pretty much impossible, right? So Python is definitely, I mean, I think Python is the most used language in the world now. It's very, very easy to learn. It's a fantastic language. So, if you haven't jumped on the Python bandwagon yet, I highly recommend that you do so. And then Henry is asking, did that Discord Microsoft deal go through? I missed that update. I think it's still speculation. I don't think it actually went through yet, as far as last I heard. But we'll see. This $10 billion, it's a big deal, I think that would be one of Microsoft's biggest acquisitions. So join us on Discord. It makes a lot of sense. It makes sense that they're acquiring for that much. Cool. Okay. All right. So to go back to the presentation, so that's we've covered all this, and then one more thing I got to mention before I introduce Greg is we have a survey at the end of this webinar. Please make sure that you fill out the survey. We're always listening to this. We're always watching for your feedback. And that's how we've constantly improved this thing over time. Greg could tell you too, like when we first started doing this, like we've improved things. We've basically listened to your feedback the whole way through. So please make sure that you tell us what you think. Not only is it going to help us improve the webinar, but it's going to help us improve the courses. It's going to help us improve the company. So please, we really we love getting your feedback actually. Q&A, one more person on Q&A. When will your self-paced course with pre-recorded video be available? For the machine learning course, if you want a self-directed class for machine learning, get on the phone with one of our sales reps and they could actually set you up with that. That class, I mean, we'll be adding the lectures as we go through the course. I'd say probably like 4 weeks into it is when you'll actually be able to access those videos. We don't release it right away. Obviously there's, this way people get the live learning. They're kind of if you want it to be released immediately, that's you pay for the live, right? But for the self-directed, we release them a couple of weeks afterwards, right? Okay, cool. All right, so without further ado, let me introduce Greg Tanaka. So Greg, really, really smart individual who's going to be teaching this class, of course, for machine learning. He has degrees from like all the top schools in the world, basically, Stanford, Caltech, and then I think Berkeley was the last one. Is that correct? Yeah. So a couple good schools. No, why didn't you go to Harvard? What the heck, I think Stanford's actually better anyway, so who cares? But yeah, so obviously great education. He also runs a company called Pico Group, which basically does this, right? Does machine learning for like hedge funds and things like that. That helps them get good returns and helps build out these types of algorithms. They've been funded $10 billion, $10 million by 10 billion. I'm thinking about Microsoft here. 10 million, maybe one day, someday soon, Greg. But funded $10 million by Google Ventures. I think Andreessen Horowitz is another one. Yeah, so basically like all the top VCs in the world, which is actually even harder than going to Stanford, to be honest with you, is to get that kind of investment from them. So obviously very well accomplished individual, and I see no one better to teach this type of course, right? So without further ado, I pass it on to Greg.
Thank you, Robert. Let me share my screen. Actually, you have to stop sharing. Okay, let me continue. Can you guys see my screen? Okay, awesome. Okay, yeah, thank you, Robert, for that great introduction. So let me continue on the presentation here. And let's talk a little bit about like why machine learning. Why do you want to do machine learning? To understand that, we have to kind of think about what are we doing when we're doing algo trading or trading stocks or securities or cryptocurrency, whatever it might be. And what we're essentially doing is we're trying to forecast the future. We're trying to predict what's going to happen. And there are many ways to do that. And one of the common ways that people do that is they use technical indicators. So like for instance, RSI or relative strength index is a very, very popular one, very, very common. And this is the traditional way that people would trade stocks, at least through technical analysis. They'll use these kind of indicators and they'll be kind of like a predictive as to what will happen in the future. And so here you can see example. So this is for the stock TSG, the STARS group. You can see this stock bouncing around. And then down here, RSI, you can see the RSI, the indicator, RSI indicator. And if you squint your eyes really hard, you can kind of see that, well, when this hits at a certain level, it's gonna be predictive to this run right here. And then it's gonna start flattening out according to this indicator. And you can look at this and it's like not so easy to see, right? There's a lot of noise here. And this is the truth of most indicators. It's not necessarily so clean cut to exactly when do you want to do things. And so, but in a sense, this is an example of how people kind of use these kind of indicators to try to figure out what's going to happen to the stock so they can know that they should buy here and maybe start thinking about selling it over here. So this is the core of what you're doing. Either you're doing it algorithmically, you're doing it manually. You're always looking at some sort of predictive signal as to what will happen so that you buy and sell at the right time. Now, what's the problem with traditional trading indicators? Well, the big problem is just that, and most people may not be aware of this, but something like 80% of the stock market volume is algorithmic trading. 80%, right? So humans are only like 20% of the trading volume, and these bots, these algorithmic trading bots, they pretty much are like used by all the big hedge funds, all the big all the big financial firms, and all the really easy strategies, the ones that you read in maybe textbooks, they're pretty much like easy ways to make money. Those are all pretty much like they've already like cleaned up all that possible profit, right? So there's not a lot of easy stuff left as a result. So the analogy I like to use is, on the street, sometimes you see, a penny, right? And a lot of people will just walk past the penny. It's like not enough for them to stop down and pick it up, right? It's just not worth it. And but so sometimes you find these $100 bills, right? And finding a $100 bill on the ground, that is rare. And if you see that, I don't care how rich you are, usually you will pick that up, right? That's usually the thing. Now, because there's all these algorithmic trading bots out there, those $100 bills are frequently picked up really quickly. So all the easy stuff is picked up really quickly. The pennies are left there. So this is also why individual investors are starting to get into algorithmic trading, because you can make some money, but you can't make a ton of money each trade. And so you gotta have something automated, because otherwise it's not worth their time to pick up a penny, right? The second thing that that's happening is that these really simple indicators like RSI, they don't really have the capacity to have that much predictive power, right? So the way to measure predictive power of a forecast model, and RSI is a you can think of it as a very simplistic forecast model, is how many parameters does it have? And something like RSI may have like 1, 2, or 3. There's like very few parameters in these really basic technical indicators. A lot of these technical indicators were made before computers, or before computers became widely available, and so they had to be easy to calculate by hand, right? So but these days, there's processing power, computational power is really easy to get. So the result is that if you're using these really simple indicators that all these bots are using, and they're running 24/7, it's really hard to get an edge, right? It's really hard to make money in the market, because you don't have that edge, you don't have that advantage over anyone else. So this is the problem with the traditional trading indicators, that the models are too simplistic to capture complex patterns. And the other fact is that you're going against a bunch of bots right now. So what is a traditional indicator versus machine learning? So traditional indicators are simply a thing like, you can think of like a moving average is a form of an indicator, right? A moving average is just the average of the stock over a certain window of time, and it's usually rolling, right? So very easy to calculate. If you use a calculator to do that, very simple, easy to understand. the problem is that, like you take a moving average example, it can't factor in that maybe like Microsoft is buying you know, for $10 million a hot startup, right? You can't, it doesn't factor that in, right? You can't factor in other kind of external data. Another big problem with traditional indicators is that it's too popular. Like everyone uncle already knows about it. And all these algorithmic bots already do it already. So it's hard to get that edge. This is the problem with traditional indicators. With machine learning, okay, the downside and the reason why it hasn't been that popular until recently is that they're computationally complex and they're much harder to implement, right? Typically, you have to be like some sort of PhD to figure this stuff out. But the great thing is that a lot of companies have been packaging up these really complex models so that mirror models could use it through just an API call. And so that's what I'm going to show. So there's a lot of things which used to be only in the realm of some guru, and now it's actually mirror models could use it. The other really great thing about machine learning is you can factor in lots of different information, and I'll show you an example of that, right? I'll show you an example where we're basically taking traditional indicators, and I'll show you what happens when you're able to incorporate in, let's say, a new type of indicator like natural language processing, right? We're actually looking at the stock news, right? And so this is very much the cutting edge. So this is where you get the edges, because this is something that even a lot of hedge funds, because machine learning models are a little bit more black box, they will not use because they're not truly explainable. But this gives individual investors an edge and a way to differentiate versus traditional, algorithmic trading out there. So what is machine learning? So first of all, you have to kind of understand what is traditional conventional programming. So traditional conventional programming could be something like if you would have like a program and data. So this program would be, let's say, for instance, like Python code. You have Python code, it would look at the data, like maybe add up, what is the average price over the last two periods. So maybe take period 1 and period 2, add them together, take the average, right? That's an example of what a program would do. And it would say, okay, it's if the price was $5 before and it's $10 now, the average is 7.5, right? It will spit out the results. So that's what conventional programming is. It's explicitly telling the computer what to do. Now, what machine learning is, it's much more analogous to the way a human learns, right? So rather than just humans going to brain surgery, but most people, the way they learn is they're shown an example of what to do, and then they learn by copying that example, right? So rather than saying, okay, we're going to take explicitly take the last period and period before and average it to spit out the result, what happens is you would show what the result is, right? What the data was, like to say the historical stock prices, and then it would create the program for you, right? So we would use like neural networks as an example and figure out the weights of the neural network to generate what the result is. So it's really interesting in that it's kind of basically making programming more similar to the way humans learn versus the way the machines learn. I just saw that Kumar asked a good question here. I think your average return / gain is 47% or so. Is that an annual growth with your ML algorithm? Yeah, so I'm going to get into the results and talk a little bit about that. So it's the one reason why machine learning has a nice advantage is because it gives you a way to differentiate. If you're using all the same signals that everyone else is using, you have no edge, right? So you notice that some of the big hedge funds go out of the way to get like some sort of edge, some sort of proprietary information, right? And kind of like what machine learning allows you to do is allows you to use lots of different data sources and be able to incorporate that into a model. And that's very hard to do with conventional programming. So so machine learning basically is kind of flipping the problem on its head. So instead of having a program that explicitly tells the computer what to do, you give the model the result, and then it figures out what the program is. So it's pretty revolutionary because there are some problems you just simply can't solve, like explicitly programming. So I'm going to get into kind of what was just asked, which is, as Robert mentioned, I run a company called Pico Group. And what we do is we work with individual day traders who have a trading strategy and they want to basically do some sort of custom trading strategy, usually involving machine learning. So we do that on a consulting basis, and then we typically host it on the cloud. So we host on the cloud, we use Google Cloud, and I always suggest running it in the cloud versus on your own computer, because like yesterday my internet went out. You can imagine if you're trading and your internet goes out, it's kind of bad news. We provide a graphical user interface where you could use on your mobile or your desktop to turn on the bots or turn off the bots and control them and set different parameters. We have safeguards, so if the portfolio drops by a certain amount, we kind of pull alarm bells and stop trading. Backtesting. I cannot emphasize the importance of this enough. So what's a good trading strategy for one security may not be a good trading strategy for another security. And also what works for one period of time may not work for another. So backtesting is really important to make sure that's robust, that your trading strategy actually generalizes. So that's the other thing, that's the other infrastructure we provide. And then we have a big suite of machine learning models that we use to help our customers figure out what's a better forecast than what they're trying to do for the securities that they're trading. So so first thing I have to say, this is kind of a SEC thing, but everything I mentioned for here is just strictly historical, is not predictive of what will happen in the future. This is just, you can think about it almost like for entertainment purposes. But for machine learning based investors, they get much higher Sharpe ratio. So Sharpe ratio, if you don't understand, is a measure of how much performance you get versus the risk. Because you could get a lot of performance, but if the risk is really high too, then are you really winning? So that's what the Sharpe ratio is conceptually. And anything over 1 is actually pretty good. So 3.3 is like crazy high. The other thing is annual compounded growth rate. So this means like if you have with $100, you'll get $42. You have $142. Well, not quite exactly, but basically you can think of it like that for the kind of growth rate. And so definitely kind of like the leading edge today is around using machine learning to get much higher performance. So I'm going to get into a demo now and keep the questions coming in. So we'll be using Alpaca. So if you guys don't know, Alpaca is they're kind of like the Robinhood of algorithmic trading. They're actually based here in the Bay Area where I am, zero cost API trading, which is pretty nice. So it really allows a lot of not high frequency, but like higher volume type of trading. We use Python. Panda data frames is you can think of it like the Excel of Python, right? It's a way to manipulate lots of things through Python, but you can almost think of it like a spreadsheet, like a spreadsheet accessible through Python. And then I'm using this library called TA. It's a technical analysis library. It has a bunch of pre-made technical indicators in there, scikit-learn. So I'm going to be using a random forest model. Google Colab. So Google Colab is one of the best deals out there. So you get free computational power. You can't run it for very long, but it's free computational power. So you can get free compute resources, which is really nice. It's also a great way to learn Python if you don't know Python already. We're building this on Google Cloud Platform. It has probably one of the strongest machine learning out there, and so it has a lot of really neat AI machine learning APIs that allow you to do some pretty powerful things that you couldn't even do even 1 or 2 years ago. And then we're also using the Google Natural Language Processing API. And I'll show you how that works in our example. So this is actually taking a data source that normally you couldn't incorporate into some of the more simple models. So natural language processing is pretty much these days all deep learning. So these have these rather large neural networks that allow us to process human language and figure out things like sentiment, right? So let me go into the code. So what we're doing is we're taking historical stock data from Alpaca. So it's an online brokerage. There's a website out there, and some of you may actually be using it right now, called FinViz, or Financial Visualization. So finviz.com. And then we used a package out there, a Python package out there called Beautiful Soup. It sounds like a crazy name, but it's basically a web scraper. So it scrapes out FinViz to get the stock news. And then we use that to create a training data set. This is how we train the model. They also create a test data set. So that's kind of the setup. And machine learning, most of the code is around the setup. Most people think, oh, it's the model. No, it's not. The model is just like one line of code. The setup is like is largely what it is, right? And you think about like you put yourself in the shoes of a teacher, what the teacher mainly is about is preparing the lessons, right? They're not, he or she is not necessarily like um, building a student, right? So the amount of code you have is that most of the code is actually always in the setup. The training is actually pretty small. So then I'll generate the predictions and then show you the analysis of the results. So I'll show you with natural language processing or without natural language processing. So yeah, so let me go to the code first, and then just kind of walk through it quickly. Oh, first let me show you what FinViz is. So if you guys aren't using, this is actually a really cool website, financial visualizations. You could do lots and lots of different securities in here. But one thing it does have is the headlines. So I try to keep this simple, but yeah, and you could do much fancier things like you would. This is for learning. I'm trying to make this simple so it's easy for you to follow along. So we'll look at the headlines for a certain security, and then we'll take the headlines and we'll plug it through the Google natural language processing. And what we'll do is they'll look to see whether is that like a positive headline or negative headline, right? We forgot the sentiment. And then it translate that into a floating point number. We take that floating point number, then we feed it into the random forest model. So that's what's going on. So let me show you the code so you kind of understand. So I'm not gonna walk through every line of code because I want to save time for questions and have more interaction. So these are some of the requirements. These are the things that are needed for the Python program. These are like libraries that we want to be able to use. So you can see Alpaca, you can see like NumPy, you can see like the Google Colab, so that we can access the secrets. And then we're using the random forest model. Okay, so here's a setup. One thing I always suggest is never keep your keys inside of your Python code. So I like to use Google Secret Manager, and then yeah, down here what we're doing is we're just setting up using the Google APIs for Google NLP, natural language processing. So that's what the client is here, and there's just some credentials that we're having, and then what we're looking at is a sentiment score. So we're setting up the client to basically return what is the sentiment score. So what we're doing here is we're feeding in the headlines. We're passing it to the NLP model. So basically, like a sentence, the headline of that stock, and then we're feeding it and we're returning a sentiment score. Beautiful Soup is an awesome Python library. It sounds like it's a really crazy name, but it's an awesome Python library. And what this allows you to do is allows you to scrape information from a lot of different websites. So it's a great tool. And then what we're going to do here is use the FinViz website that I just showed you to basically get the headlines. So we're pulling the headlines. We're getting that through Beautiful Soup, right? We're using the Beautiful Soup library, and then we're basically building a list of headlines, right? That we're going to be passing through to Google NLP. So basically cleaning up, doing a little bit of cleanup of it so that it's possible through the Google NLP, and then yeah, so just a little bit more like scraping it, cleaning it, adding it to our list, and then what you get here, and I'll show you what this looks like. You can see like we have the date. So I'm just using A. So A is the Agilent. I'm just using Agilent stock as an example here. And you can see it's scraping all of the headlines from FinViz, right? And then what you see here in the score is the sentiment score that I talked about earlier. The sentiment score that was output here by this function. And what the sentiment score is doing is saying like, okay, whether it's a positive or negative headline. So you can see like, why is Agilent down 5.8%? as a human, you kind of know that's probably not the good news, right? You want things to be going up, right? So that's a negative. That's like a negative sentiment score, right? Um, um, and then there's some stuff that's like neutral, like dividend, right? So it's like a 0, right? And there's some stuff that might be positive, right? Like beats Q3 earnings. So that's like a positive sentiment, right? Shares dipping. So we basically use these sentiment scores as kind of like a feature that we feed into the library. So when I talk about feature, the features are signals going to the model that help the model know like to do a better prediction. So anyway, so I could get that in there, get it formatted for the model, and then what we're doing here is we're basically now scraping a bunch, not scraping, getting a bunch of stock data from Alpaca. Okay, so Alpaca has something called Barset, and basically what we're doing here is we're pulling a bunch of data from Alpaca for the security, right? And that's what this function here is doing. Okay, so let me talk a little bit about the setup here. And if I'm going too fast for you, just let me know and I could try to slow down. But I know if I go into too much code, people will fall asleep here. So the target stock is Agilent. We are basically doing 1 minute increments here, and setting up all the features of time features here. So like using this as features for the model, and then basically what we were doing down here is we're pulling in a bunch of kind of common technical indicators, and then feeding also in the sentiment that we talked about earlier, the sentiment from our headlines. So if any of you guys were here on the last call, we have basically one new feature that came from the Google natural language processing, and so we basically, yeah. So you could see the sentiment, you could see the like an example indicator and a close here, or the closing stock price. So we get that all set up, right? So you see most of the code here is actually the setup for the model, and then now we have to do the same thing. We have to do it for the test set. So in machine learning, you have a training set. So you can think of it like in school, right? You have like the teacher lecturing, right? And telling you the answers, like here's what you do and here's the answer, right? That's like what you call the training set. And then at the end, the teacher gives you like a pop quiz or a final or a midterm, right? And that's like the test set. That's what you have to think of, right? So the teacher is trying to see, did the student learn what she just taught them or not, right? So it's a very similar idea, except with machine learning or deep learning, you're giving way more examples because machine learning models don't have the context that humans have of 20 years of human existence, right? Or however old you are. So here is basically doing the same thing. So we're getting the setup for the test environment. I mean for the test set, and then so here's an example of what this looks like. So what is the close, the time of day. So these are the features, like the time features. Here's the volume. Here's the NLP output. These are just technical indicators that we talked about before. And then what we're doing here is this is the other part that's really important. So what we're doing is essentially what's called time series forecasting, which is very different than like this machine learning is kind of broken into time series and non-time series. Time series forecast is, as you mentioned, time independent. And those, when you're trying to do the training and test set, you could just basically do a random set of tests and training. But for time series, you can't do that because what happened in the past can be predicted for the future. So you can't take future data, put it back in the past, and then try to predict future because you get this leakage of future information to the training model. So what you have to do is something called like a rolling window or expanding window, where you have to make sure that the amount of training data that the model is getting never gets future data. So you use like a rolling window. So kind of so as you forecasting, you're basically making sure that the forecast distance isn't too far, but making sure that the future data doesn't go back into the past data. I know this sounds really complicated, but it isn't. It's basically you want to use as much data as you possibly have when you're making a forecast. That's basically the idea, and that's what this is doing here. So as I talked about, this is where we're doing the training, right? The model is literally like one line of code here, right? So this is what we're doing here is we're training the model, and we're doing it on a rolling basis because again, you want to use as much data as you possibly have when you're doing forecasting. Okay, so that's what we're doing here, and then here now you can see what the output is. Yeah, so I forgot to talk about this. So this is the we're doing the predictions, right? So basically what we're doing here is not visualizing, but seeing what it looks like. So you see these are all the things that we fed into it, and then you can see what the model predicted, right? So in this case here, the stock price was $125, and the prediction was $122. So not perfect, but close. Okay, so that's this is $121, and here the prediction was 121. So not bad, right? Okay, so let's look at to see how this looks in a time series view. So from a time series view, so this is a few days. So the 3rd, the 5th, the 7th, the 9th, the 11th, 13th, etc. Right? And so you can see the close, the actual is the blue line, and then the predicted is the orange line. And you see these straight lines because this is essentially when the market's closed. So the jaggy lines is when the market actually was open. So you can see overall, it's not perfect. If it was perfect, you wouldn't even see the blue line, but it's pretty close, right? When the market's closed, it doesn't matter. But when it's really when the market is open. So that's what you should be looking at. Now let's look at what were the features that were important. We're doing like predictions for like 1 minute or 15 minutes, like segments. So this is very, very short prediction windows. So you can imagine the news that I'm getting, the headlines, is not like, it's helpful, but probably not terribly predictive because you're not getting news every second or every minute, right? You're getting news every day type of thing. So day level granularity. So you can see the most important feature was actually RSI. So that's not too surprising. That's why RSI is used a lot. But you can see also the sentiment added some value as well, right? There's some of the technical indicators that added 0 value, right? But you can see the sentiment, which is the NLP. So this helps. Now you might be saying, oh, gee, that's just like so little versus RSI. Well, the way to really think about it is you don't need to. The name of the game in the stock market is, because it's kind of like a zero-sum game, is you don't need to be 100 times better than someone else, right? That's not what has to happen. You just have to be a little bit better, right? So this little bit is all you really need to be more than someone else. You just have to be a little bit better, just a little bit, even by a small fraction of a percent better, and you still will do better than everyone else. So that's what matters, not how much. A good question from Kumar is, how many time, steps, hours, days are you forecasting with this model? So this one basically we're doing every minute, right? And we're forecasting 15 minutes in the future. So good question, Kumar. Okay, so now, so we saw visually how this performed. Let's look at it. Let's see how it looks like on a numerical basis. So you have to kind of set up what are the metrics that you want to measure a model by, and so a mean squared error is usually a pretty good one. Or you can look at also percentage error. Percentage error is more easier for you to associate with. So this is like 0.25% error. So not bad, not totally off. And then you see mean squared error. Mean squared error is a little bit harder to, because most people don't think of it like that, and it depends on what the price is. So, but you can see the stock price here is $125. Mean squared error of 0.23 is not bad, right? It's relatively small compared to this overall stock price. Okay, so I showed you this is with the NLP. Now let's look at the same thing without NLP. So a lot of this is very, very similar, just not putting in the sentiment, right? So so basically doing the same thing now, but without the sentiment, right? So so it's similar code. We're just dropping the sentiment out of it. And so now the question is, well, how much better or worse is this, right? So we can look at the graph. Visually, you look at this and go, gee, it looks kind of the same, right? And so it's hard to tell because again, this isn't like a night and day difference, but you don't have to be that much better. So how much better did the NLP help? So let me, oh man, I wish I could scroll better. Okay, so it's gonna be a little bit challenging for you guys, but okay, this is 0.258. Okay, remember that number, 0.258. Okay, let me scroll up now. Okay, and so this is 0.257. So you can see it's a little bit better, not ground shaking better, but it is better. So it's and that's kind of reflected by the sentiment here. Okay, now there's a you guys may not be familiar with statistics, but there's something called F value. Okay, and what F value is a way to measure whether this is significant or not. Is this statistically significant? I don't want to get into details of all this, but if you guys want to know more, just go to this website here. And basically, what we're doing is calculating the F value as well as calculating the P value, right? So P value lower the better. Okay, so so in this case, the P value, if the P value is less than 0.05, that means this is statistically significant. I realize I might be going too much math for everyone, but anyways, so the point is this helped. It improves the accuracy, and you can also look at it from a statistical basis. Okay, so let me jump back into the presentation because I just realized we're almost at 6 o'clock. Okay, so that's the forecast model, and this is kind of the heart of a trading strategy is a really good forecast. Now, what do you do once you have the forecast? Well, what you want to do is you want to do trading. So this is a simple trading strategy, which is if the predicted amount of forecasted price is higher than the current close price, well, then you should buy, right? You should go long, right? So and there's some sort of threshold, like 0.5% or something, whatever threshold you want, so the thing doesn't jitter too much. And then if the prediction is forecast to be lower than the current close price, then you want to sell, right? And if it's even, you don't do anything, right? So very, very simple trading strategy. Now, let me show you an example of this in action. I know I'm running a little bit short on time, so let me try to speed through this. So we have this is what our application looks like, and let me just submit a trading strategy. So we support both Alpaca and interactive brokers. This is not an option thing, so I can use Alpaca. Let's just do a back test here. We do it for a stock instead of options. We're not going to include a bid ask spread because it would take too long. And then we're not going to do multiple retrainings here. Let's do basically 3:10. The market opens at 9:30 a.m. Okay, let's do it for a few days, 15th, and then this is going to the market close. Okay, let me go to the next. Okay, kind of trading strategy, we're going to do a simple one, the one I just showed you. And then in terms of trading offset, so this is the thing I showed you earlier, what's the threshold should be. So we're going to pick a really low one because Agilent is not a very volatile stock. I'm just going to go to 2.3. And then the stock I'm going to pick is just A, the first one, Agilent. Let's just trade 10 stocks at a time. Let's see. I'm going to not set a max position, and we're going to sell everything when we're done. Okay. And then the one we're going to use is the rolling random force model that I showed you with the NLP. And then the time scale we're going to use here is basically minutes. And then forecast this is 15 minutes in the future, and then we'll trade every 15 minutes. Okay, so let me save this. And this is just created the trading strategy. And so we can watch it run here. Okay, so it's right now it's running. So while that's running, let me go back to the presentation, and then hopefully we'll finish soon. And then, oh, actually, we have another question here. Do you have a variable importance plot of the model without NFP? I do, but not right here. I had it. If you guys want to see what it looked like, you could watch the last YouTube video, but I did show that last time. I don't have it handy right now, but yes, I do have that. Okay, let's see here. Let me go back to the presentation. So so basically what this is showing is the capabilities. I just showed you a really simple thing like taking the headline. You guys would do something a lot more. So in this training course, what we're going to be doing is we're going to be going over what are the machine learning basics. So like what is machine learning, how it works, how you set up an experiment, how you track an experiment, what deep learning is, when you want to use it, when you do not, when do you want to use more like shallow learning. We'll build a kind of like a basic stock forecasting model. And then we'll do one where there's a lot more depth to it. So so let me actually jump to the machine learning course. So let's see here. So let me go over what the course curriculum will be. We'll start off week one, kind of doing introductions, helping everyone get set up, making sure everyone's ready to roll. We're going into the basics of what is machine learning. I always like starting off with simple models. Like everyone knows what linear regression is, very, very simple to understand. So that's kind of like the start of it. Then we go to more fancy models. Training, this is everything. You got basically put yourself in the shoes of a teacher. You're basically a teacher of a computer. And then deep learning. So what is deep learning versus shallow learning? The other thing is deep learning is not suitable for all cases. So you want to pick and choose when you want to use it. And then how do you train and validate deep learning models? And then this is the awesome thing is that companies like Google and others have really put really great APIs to this stuff. So it's a lot easier now to use very, very powerful models without having to do a lot of work. So I talk about how you optimize models, how you set that up, how you run an experiment sheet, which is really important to make sure that you actually make positive headway forward. And then the first project is going to be building this time series model, understand what is time series, non-time series, the theory behind it, the whole training and validation process, building that model. And then the capstone is literally what I just showed, which is using Google Cloud Natural Language Processing, because I showed it from one headline, but you can use lots of different headlines. So you could process Wall Street bets on Reddit. You could process and do a lot more than just sentiment, right? You could do really fancy things. In my example, I just showed a really simple example because I want to make it easy for people to understand. But the idea is by the end of this, you'd be able to actually have a machine learning bot using natural language processing that can do some very sophisticated things and probably make you some money. So that's what the course curriculum is. Let me jump back to the presentation. Okay. Let me check to see if this thing's finished running. It is not finished running yet. We're at 6 o'clock. So let me do what a good cooking show has, and I have the results here. So okay. So if we wait long enough, this is what you would see. Okay. So so this is Agilent. So you can see the results of this trading strategy are nice. It has a nice Sharpe ratio, 3.87, which is phenomenal, right? That's really good. The compounded annual growth of 28%, which is still really, really good. This is just a little toy example here, but still it's like pretty positive results. You can see like the amount of stocks that it bought, and then the margin that was required for this, volume of trades. And then here you can see the price forecast. You can see the blue line is the both blue I see. So basically the light blue line is the predicted close versus the close, and you can see the error. Yeah, so we're a little bit over time here, but I wanted to just kind of get through this for everyone and be able to get to people's questions. So okay, yeah, okay, great. We're getting some questions in here. So the first question is by Agbor. Do you provide sample code templates? The answer is yes, but these templates are just to get you started, right? The idea behind the course is so that you guys can can go beyond this, right? Especially with the NLP stuff, there's so much information out there that can help you inform the direction of a stock. That's what you want to start incorporating into your model. So we provide templates, but really the idea is for you to make this your own, right? To be able to incorporate your specific knowledge. So let's say you're tracking NVIDIA, or you're tracking, Tesla or GameStop or whatever it happens to be. Is to incorporate some key insight you have about that stock, and you could be able to put that into the model so that you could actually do better trades. But really good question, Akbar. Next one is by Kumar. You compute sentiment score with deep learning. For the stock prediction, do you use random forest? Do you plan to use deep learning in the stock forecast? So it's a very good question. So deep learning, the challenge with deep learning is that you need lots of training data. And the problem with time series forecasting is that you only have as much data as you have time. Okay, so the problem is there's not a lot of training data. So to use deep learning for the time series forecasting is actually challenging. You can do it, but it's challenging because you can't generate more time. Now, non-time series problems, because you're not limited by how much time you have, right? How much historical time there is, you basically can use deep learning. Let's say you're trying to classify cats versus dogs, right? You can always get more snapshots of cats and dogs and label it, right? There's no limit, right? There's no, but time, you can't generate more time. So that's why shallow learning tends to be used more for forecast models, because you're limited by how much time there is. Now, on the other hand, like look at natural language processing. Natural language processing, there's no limit to how much training you can provide, right? You're not limited by the amount of time. You can use all of the whole internet, all the text on the internet as training data, right? So that's why it's typical. But you can use deep learning for time series, but it's harder, much harder. And then Bryce asked a good question here. Can you elaborate on what we have in the third course plan and after the bundle course? I think that's probably a good question for you to answer, Robert. I think you're muted, Robert.
All right, perfect. Yeah. So, can you elaborate what we have in a third course plan after the course bundle? So, I'm not entirely sure what you're asking there, Bryce. I feel like you'd be asking about a few different things. So I'm going to talk about all of them across the board here. First of all, on the page, there's 3 things on the web page. The last one after the course bundle, that is basically a project help and tutoring. So what that does is it gives you access to the live course as well as additional time. So we can get, some of our software engineers to help you out. We can get one-on-one with some of you guys. And then, we give you a lot. So you get access to the live course, but also you get access to someone who's going to like really help you make sure that you build the spot out correctly and all that sort of thing. So it's maybe that's what you're asking about is that third bundle on that page, right? You may be also asking about our future courses, which we have 2 courses that we're planning out right now for you guys. One of them is for building an options trading robot. I can't tell you how many times I've been asked about this. It's crazy, the demand for this. So we're working on that right now. We're building out Lumiwealth to be able to handle options, and we're making a course for you guys. And they're also making a course, and this will probably come out maybe in the next 2 or 3 months. And then we're making another course that, a lot of people ask us about helping to get jobs in this kind of industry. So we want to build a course that's really specific around getting jobs in financial technology or at banks or things like that, and kind of teach you the skill set that they'd be looking for in the interview process. So those are 2 courses that we're working on as well. I have a feeling it was probably the first one that you're asking about, the third bundle, but I just want to answer both just in case there's some ambiguity there, right? Let me know if that was good. Let me know if I answered it correctly, or if I got to the point that you're asking.
Okay, so the next question is, can you forecast cryptocurrencies and what are you planning on teaching? So I can tell you that using machine learning for cryptocurrency is actually very popular. It's kind of a new area. In this course itself, we're not focused on cryptocurrency. We're just using Alpaca. It's a good foundation. The same principles you learn in this course could be used for other securities like cryptocurrency or Forex or options or other things. So this is more about revolving around machine learning. How do you build a good forecast model? How do you take in good features? How do you use things like NLP to be able to um, basically take any kind of input? Because that's the key thing is in order to make the model, the way you have to think about forecasting is each feature, basically each signal that comes into the model has a certain amount of predictive power, right? So more kind of features you have, generally the better it is, right? To a certain point. Um, and what you're doing is your model is trying to mine each one of these features to get that prediction out of there, right? So each of these data sources have it, right? So there's all the traditional kind of indicators are just based purely on the historical stock price or volume and stuff. And then there's a whole bunch of other new features you could use that you could use to NLP. So you could use Reddit, you could use FinVez as I showed you. You could use like Motley Fool, you could use whatever it might be as features into your model, right? And so you can build models that have much better predictive power than you could traditionally. So if you have these kind of signals, it's something which gives the model an edge, an ability to actually get higher accuracy. But very good question. So yeah, so what basically everything you learn here will be able to be transferable to cryptocurrency, to forex, to whatever else you want to trade in. Very good question. Okay. I think those are all the questions so far. Are there any other questions that anyone else has?
Cool. Well, that sounds like we probably covered most of the questions there. I'm gonna just talk about a few things. While if you guys want to type out some questions in the meantime, really great presentation, folks. Thank you very much, and I think especially thank you very much to Greg as well. Fantastic presentation, as usual. So I want to talk about a few things before you guys leave off. First of all, if you guys want a recording of this, check out our YouTube channel. I think it's gonna be posted like right after, maybe a few minutes it takes for YouTube to process things, but the recording is gonna be right on there. And then we're also gonna be adding on kind of links to this presentation on there as well, and the Discord and that sort of thing, so you'll be able to see it there. We're also gonna be sending out through email, right? So you'll get access to that too. That's one thing I want to cover. Another thing is a reminder, course starts in a week. So if you guys, literally next week is when this course starts. So if you guys want to sign up, make sure you sign up as soon as possible. You guys can book a time with one of our sales reps. Alicia or Joe is someone who just joined our team. You can speak to either one of them. They can help you out there. And you can go to our website, you go to the bottom of the page, book a call, you can book a call there. Yeah, and then I think that's it. Oh, and we're doing a survey at the end of this, so make sure you fill out the survey so we can continually improve this thing as well. Yeah, I'm not seeing any more questions here, Greg. So I want to say on behalf of everyone, thank you very much for your time. It's always a pleasure listening to you go over all the stuff. I mean, this is, the types of returns that you're getting for your clients is absolutely amazing. I feel like you're always very humble about this, and I get the reasons why, but 43% average return for your clients. Guys, that compares, the stock market makes like 10%. He's making 4 times the stock market returns. Like that's crazy. You know what I mean? Like, and not with a high Sharpe ratio, meaning he's not taking crazy risks, right? So, I mean, this is clearly something that's working for his clients. The legal thing is, it's going to be different for everybody, but I mean, the results speak for themselves, I think personally. Right. So, again, thank you very much, Greg, for your time. Thank you, everybody, for paying attention and sticking through this webinar and signing up and all that sort of thing. And hopefully we see you in the class. Like I said, I'm going to be part of this class as well. So if you guys join this class with Greg, I'm going to be listening in as well, because I love learning this kind of stuff. I'm a lifelong learner. It's kind of my thing. I always find that the best kind of business people or whatever else are always the people that are constantly learning. Actually, I was listening to something by Brian Chesky when Reid Hoffman was interviewing him, talking about how he's a lifelong learner. So that's something that I very strongly believe in, and I'm going to be in this course as well. So hopefully see you guys there. and make sure you sign up. It's next week. Cool.
Yeah, thank you everyone for listening, and thank you for the opportunity, Robert. Appreciate it.
Awesome. Thanks again, Greg.
Okay.
Hope you have a great night. I hope everyone has a great night.